Hi everyone, these are the candlesticks that you see in all the graphs. We'll run over the basics of reading them. So down the bottom here you have an opening price on your positive, being green, and your closing price. So obviously it's moved up for the day, being green. And then on your reds, on your negative, then you have your opening price at the top and your closing price down the bottom. So then that's the loss of that sector, I guess, before it moves on to the next one, to the next one, to the next one. So anyway, going with this. Now there's a few different styles. They call them the hammers. So you got hammer, inverse hammer, hangman, and shooting star. And learning all those does help you sort of dictate or read the chart a little bit better. But to generalize it, the basic understanding is it is just buying and selling pressure. That's all it is. So as you can see with in the negative here, as it's falling, these sticks down the bottom are showing that it is buying pressure. So it's falling to a very low and then coming back because people have started to buy on top of it. And there's a bigger buying pressure and more buying pressure. Now before here, normally you'd probably see a few candlesticks with no pressure at all, or even pressure either side, or just little bits up and down. Not a lot of pressure at all going. So this is what helps you depict the buying pressure as it's falling, and the buying pressure is picking up. Then it's like, ooh, it might be coming to the turn of it then going positive. Okay. So, and as you can see there, the buying pressure is still really good. So it may have come down, but there's a lot of buying pressure going up, so it's on its way. So with the positive, as you see, as it's coming up, the selling pressure is high, and the selling pressure are bringing these sticks down. So as the selling pressure gets a bit more and stronger, especially in a consecutive order, it is telling you that there's probably going to be a turn where it starts to fall again. And so that's basically how you generally read them. It's all about buying pressure. And the one thing that we were wanting to know is, when is it going to turn? We want to know how high it can get, or when to sell, and how low it gets into the dip to be able to buy. So this is a good way, or the main indication through these candles is buying pressure on when to do that. So let's have a look at, as an example, SNEC. I like SNEC. I've made good money on SNEC. The movement on it's normally pretty good. It's quite interesting. It's got a very good middle ground of movement compared to for market cap. So, but we'll get to that later. As you can see here, this really long stroke here now, that's a huge buying pressure. It dropped hard here after it increasing. So you got selling pressure, and then it dropped real hard, but the buying pressure of it coming back was massive. It's huge buying pressure. So then obviously the next run, it boosted again. But see how through this run here, it may have ended up negative, but only very small. But see again, the line's gone down heaps negative, and the buying pressure has come back. So there's not, or very little selling pressure there at all. Even though it's fell negative, there's a lot of buying pressure. So you've got a heap of buying pressure here. It's massive, which means it's going to be a lot of money coming through. And boom, it's gone up, and the buying pressure held, and then it smashed it again. A little bit of sell pressure, none there, no, a little bit either side there. And then it's sort of a bit of both. So there's a little bit of selling pressure, buying pressure, and then it's sold. So when it starts to flatten out like this, is when you're wondering, where is it going to go? What's the change going to happen? Because buying pressure, all this buying pressure shows you that it's going up, and then you start seeing a little bit of sell, little bit of selling pressure, and that goes, oh, hang on, tide's about to change. So then you come to this little flat spot here where there's like people are wondering what's going on, and then it starts to change. And so this is where the change here, after here, is what's really hard to depict. At least you know there's going to be a change. So if you're watching this for a full day and it's just going up and up and up and up and up, and you're making good money, and then it starts flattening out, and you can see it starts to break that cycle and come out of this line here. Once it does that, then you know it's probably a good time to sell if you want to keep your money. That's if you're going for short term, or for long term, then that sort of thing doesn't matter too much, and you're just having fun and watching it ride anyway. Okay, so that's basically how the candlesticks work. It's just all buying and selling pressure. But that is a great example. Just a quick recap is all this buying pressure here, and then change to selling to flatten out, and then that's where the change comes from. So that's when you'd either buy or sell here, you'd either sell here, and then wait to see what happens to see whether you buy in more. You do run the risk that it's going to boost again up here. You should start seeing around here if that's going to happen again or not. If it was really that predictable, then everyone would be rich. So, but that's a really good indication of your runs anyway. And same if it was coming down. If you're coming down here, you see your sell pressure. So it's sold hard, big sell pressure here. So then it's dropped again real hard, and then that buy pressure is like, oh, there's a bit of buy pressure there, good buy pressure, a little bit of buy pressure, buy and sell pressure, buy and sell pressure, not sure what's going on. And so then you have a heap of sell pressure here, which is sell pressure for how high it's going. So that sell pressure is just like showing you, oh, you don't know whether it's going to go up or go down. And that's the hard part. Until you see this here and there, that's a boost in sell pressure, but then it makes this a little bit harder to predict from that. All you can see is that if you compare it with other graphs, then you can see there's a chance that it may come up, but then it showed buying, and then once you saw this buy pressure, I would have definitely bought there and gone at least a little bit more. That's if you're putting good money into it for these little dips. But these are the buying pressures. These are how the candlesticks work anyway. I'm using a lot less money to be able to buy here and sell here. I'm going for a lot more long term. That's over that's 5-minute courses. So then we can go to our courses, which show you over the days. What I'll quickly do is let's go over a week. So this is over a few weeks. So you're going back to like October here. So I bought around the October here because it was a huge steady incline. I think I might have bought somewhere here, and then I bought a little bit more, then bought a little bit more. And when I'm talking a little bit more, I'm like a couple of $100. So a couple of $100, couple of $100, and then this here popped out of nowhere. And I gained like 70%, 70 something percent. So I cleared like $300 and something here in that lift out of about $500. I think it was about $500, and it cleared about 300. So then it came up here and played around. And once it started playing around after the big hike, I'm like, I'm out. I'll take my winnings and then try something else. But yeah, so that's over a long haul. With the graphs, just quickly, you do want to have a look over your time length. Okay, so to be able to get a good grasp of what's happening, unless you've been watching it for a while, is to start going over your time length, because it will dramatically change. And also, just a trick for young players, if you're consistently looking at the 5-minute break or an hour or the hour segments, and you're basing your information on what you want to put on over that, then make sure you continue to keep looking at the same graph time. Okay, early mistakes where I'd be looking at the 5-minute one and wondering, and then I'd come back to it, refresh it, and the refresh is back to an hour, and looking at it again, and I kept doing that for ages, over days, but then it started getting a little mixed up, and then I made a a silly bet on when it was an hour, when I thought it was 5 minutes, because I thought the dip had come, but that dip was the dip over a few weeks, because I had it on the hour segment, not the 5 minute segment. If I had it on the 5 minute thing, then I wouldn't have made this sale, because then I changed it to that and realized that was a bad idea. So anyway, lesson learned. But yes, always you do want to use your time frame and have a look over last few hours, last few weeks, last few months to get a good grasp on the one, and keep doing that over weeks to be able to get a good grasp on them. But then also just make sure if you're zeroing in on putting down money or making a trade, then make sure you're on the 5 minute one to follow your peak, or your hour one, whatever you're basing it off. Just make sure you stay on that same graph. Otherwise it can get very confusing if you keep looking at different times, not realizing that you're looking at different times. Okay, so thanks again, appreciate it, and subscribe, like, please, keep us all learning. It's the best thing, so I'm still learning too. Let's do it together. Thank you. Bye.